Let's talk about business, or even as an employee. Now in Malaysia, as what we have mentioned in the last part, we did mention that there are different types of business entities, and of course there are different types of employees in our Malaysian income tax, right? So let's talk about employees in general. Now employee is very straightforward. Employee means you're individual, you're a person. A person, if let's say you are working for a company means you are an employee of the company. Now once you hit monthly income of let's say more than 3,005, you will be charged or imposed individual tax. Now this 3,005 is just a guideline, but it may change time to time based on the tax rate that was introduced by the government. Every year they may change the tax rate, every year they may change the relief, so that will affect your taxability of your as a person. But in general, let's take this as an example. When you have a monthly income of 3,005, you are most likely chargeable to tax under the Income Tax Act 1967, which is the tax law in Malaysia. So that is on the employee side. Now let's talk about if you are, non-employee, individual non-employee. Maybe you are a retiree, so you have retired, you're a retired person, but you still collect rental income, right? You still collect rental income, or sometimes you still collect some commission income from, a sales of property, or someone give you an introduction fee. You can also file under Form BE, which is under individual. So the income tax return, in order for you to file as an individual, right? Individual without business income. Individual without business income is under this form called Form BE. All right, this is Form BE. Now, if you are looking at non-resident means you are not in Malaysia, and your taxes, whatever income that whatever income that you receive, will be subjected to non-resident tax rate. Now, non-resident tax rate at this present moment is standing at 30%, and the form that you need to file is Form M. M from Malaysia, Form M. So these are two forms that will be filed under individual income tax. We will go into depth when it comes to income tax for individuals. We will talk about that in the later chapter. You will find it in a separate chapter itself. It's a big topic that we are going to talk about, and all types of income received by an individual. Now in general, I would say under the Malaysian income tax, we refer to Section 4 for the taxability and the scope of income tax. Now, Section 4 under Income Tax Act is looking at 4A, B, C, D, E, F. Right? 4A means business income. Business income refers to sole proprietor partnerships, corporate like Sendirian Berhad or LLP limited liability partnerships. Those are under business income. So we have business income 4A. 4B is looking at employment income. Employment income, we are looking at individuals. 4B. 4C is looking at interest income. Interest income, like for example, you have gain and interest from the bank. That's under 4C. 4D is looking at rental income, and also royalty income. Now, rental income could also fall under the business income. Now, what is the concept? Why? Because if let's say you have been actively providing, and you are doing it like a business, you use it as a business. You use it as a business means, you are, for example, running Airbnb, right? For example, Airbnb. If you just do it for fun, that is under 4D, rental income. Now, if you are doing it as a business, you collect many properties, you manage them, you put in cleaners, you put in securities, you put in this, put in that to manage. You get people to manage for you. You have 100 units of Airbnb. Those are under business income. So under business income, you move under 4A instead of 4D. All right. So under 4A, you have a lot of expenses that you can claim. There's huge tons of expenses that you can claim. Anything that you incur for the business, you can claim. But of course, 4D is looking at direct expenses only. Means if you are renting that place, expenses that is incurred for that rental, that means for your property, that means refer to maybe quick rate assessment, your interest on loan. So limited expenses, direct expenses, limited expenses that you can claim compared to business income. So that is a big difference, a big difference. Now, backtrack a bit on 4C. 4C is interest income. Of course, 4C, there's another one which I missed out earlier, which is our dividend income, right? Dividend income. Take note of dividend income. At the moment, in 2022, individual receiving dividend income is exempted from tax. In fact, dividend itself is single tier dividend. So single tier dividend means you do not need to pay tax when you receive that dividend. But initially starting 2022, 1st of January 2022, the IRB wants to tax dividend received from overseas. So if it falls under foreign source income. So foreign source income received in Malaysia, IRB wants to tax it. But eventually this income has been exempted. A lot of hoo-ha happened, especially all those investment houses receive dividend which has been taxed in overseas. Now you have to tax me for another time. So the IRB or even the MOF, Ministry of Finance, give them a consent, give them a relaxation and say, okay, all this dividend can be exempted until 2026. Now those are referring to individuals only, yeah? But if you're looking at companies, you're looking at corporates, then a different guideline will apply, a different gazette order will apply, and that will depend whether this dividend is subjected to tax in overseas and the overseas tax rate is 15% or above or not. So if let's say a company in that country, particular country, the tax rate of country is less than 15%, so let's say 5% for example, then you will subject to tax in Malaysia. Now if let's say the tax rate overseas is more than 15%, for example, like Singapore is 17%, we have Hong Kong 16.5%. In general, most of them are above 15%. So above 15, like Thailand or Indonesia, they're looking at 20 or 25. In general, Southeast Asia is hovering around there. So under such cases, you are very safe because all these taxes has been paid in overseas. You bring back. Now all these exclude those under incentive. So if let's say the country having tax incentive, 10 years exemption from tax. Now that will not apply in such case, right? That will not apply. It's basically looking at the corporate tax in general in that country. So that is on the dividend income. 4E, we have annuity income. Annuity income, for example, like the annuities that you receive from pension or periodic payment, those are under 4E. 4F, basically looking at your other income, all forms of income that you receive for any transaction. So 4F is like a net, a big net. Everything that does not fall under A to E, it falls under 4F, something like that. Okay, so that's basically the scope of income tax in Malaysia. Now, I would like to go to different types of incorporation in Malaysia. I may want to put yourself in one's shoes. It really depends on the person. Okay, so there's no right and wrong when choosing your incorporation. That's very important. So in general, I would say, I myself, we have different types of incorporation under our own ANC group. We have income taxes, or our tax advisory is under Sdn Bhd, and then we have accounting, which is our knowledge processing unit, KPO outsource, is basically under an firm, which is under MIA. And I think that will fall under a sole proprietor, so-called. And we also have HRD company, which is under the HRD Corp, and that company is a limited liability partnership LLP. So I have three different entities, three different types of incorporation under my own roof, different types. Of course, there's another one which is under Singapore, so that is out of scope today. Highlight to you that every single incorporation have their own pro and cons. At the end of the day, it really depends on what you want. As an employee, there's nothing for you to choose, so you just need to file your Form BE, that's it. But for a business person, now let's say, I'm putting myself into a shoe. Let's say I just graduated from studies, and then or maybe I have worked for a company for maybe 10 years. Now I want to decide to start my own business, but I do not know whether or not this business can succeed, right? No one can assure that business can succeed, right? Even myself. Let me share with you a bit of my story, if you don't mind. That may take up a bit of your time, but you can fast forward. When I started a business back then, I'll say, I don't want to say which year, but back then. Okay, back then. So I started off as a sole proprietor. Why I started as a sole proprietor? Very simple. Because sole proprietor is cheap, right? It's very cheap. You just start at 30 ringgit. You just need to go to SSM and say, I want to pay 30 ringgit in order to start this sole proprietor. And 30 ringgit is looking at your own name, looking at your own name. So you can use your own name, Song Liu, as the company's name, entity's name. Of course, no power, use own name as the entity name. So you can then pay another 30 ringgit, which is 60 ringgit in total, to choose your name. Choose the name that you want, right? ABC Enterprise, for example. So you can choose that name, and then you can use that name, provided no one is using it. So you can take that name. Or sometimes, if the name is too similar to other entities, they may not allow it. But once you get it, you can use the entity and you will be the name owner, basically. So that's basically how I started. Now, I didn't start as an NF, to be honest to you. I started off doing other business before I get this NF firm, to be honest with you. I started off when back in GST time, started off selling software. So I use a sole proprietor. Why I use a sole proprietor? Because I have no confidence that I will succeed. But once you have started the business, you know, oh, you can succeed. Then you may want to move your entity from a sole proprietor. You can upgrade. If you want to get more people to come in, you can get another partner and then use that partner, ask them to join in into your name. That entity will become a partnership. All right, partnership. Okay, Form B, if you're running it as an individual, the form that you need to submit is called Form B. Form boy, that is on the income tax part. The form that you need to submit is Form B. For partnership, the form that you need to submit is Form P. P for Penang. So Form P is basically looking at the partnership's income tax, how much divisible income, how much income that you can share among the partners, and then each and every partner will have to file their own Form B. All right, so that's basically the flow. You can do that, of course, using a partnership, but I didn't went into a partnership. Instead, I went into a limited liability partnership. That is my own story. I started, then after that, I go to limited liability partnership. Okay, why did I go to a limited liability partnership instead of using a partnership? Very simple. Okay, very simple. If you use partnership at the end of the day, this is called non-separate legal entity. Non-separate legal entity means if anything happened to the company, the business, your own personal assets will also be affected. That's basically the idea lah. But I don't want you to have a concept or a wrong thinking that, oh, whatever I do in this company, no matter how wrong I am or I do everything that is wrong, money laundering, whatever, it will not affect my own asset. It will only affect the company's asset. That mindset is wrong. So many people started Sendirian Berhad doing fraud, doing illegal activities, thinking that that can protect them. Sendirian Berhad can protect them. The answer is no. The law does not protect you in that way, because the law says that anything happened, if let's say this was done intentionally, okay, this was done intentionally, means the person has intention to cheat, the person has intention to fraud, they can always unveil the cover. When they say unveil means Sendirian Berhad no longer can protect you, they will go directly to the directors. So that is basically the whole mechanism when it comes to separate legal entity versus non-separate legal entity. Right, for my case, I then moved to a PLT. PLT is Perkongsian Liability Terhad PLT. In English, we call it Limited Liability Partnership, LP. So I moved to LP. Why I moved to LP is I'm very lucky that I found another partner. That's number one. And number two is with Limited Liability Partnership, my compliance cost is cheaper. Like every one of you, I started business humble and small. Okay, humble and small. But I also regretted. I will share with you why I regretted. But anyway, so we started from sole proprietor, then I moved to LP. So I started LP. Then after I started LP, this limited liability partnership, the compliance cost is very, very low. Why? Every year you just need to file annual return 90 days from the end of your end of your financial year, which is within 3 months. You will need to file your annual return. The fee for filing the annual return is about 200 ringgit, if not mistaken. You just file 200 ringgit. That's it. That's it. Nothing much. So you do not need to audit your accounts. You do not need auditor to audit your accounts. And even when you file your annual return, you just need to state how much is the revenue, how much is your expenses, how much is the profit. That's it. It's very simple annual return, no complication. Just need to make sure you are the compliance officer, or you can find a secretary to become your compliance officer. And then after another year, then we started our own Sendirian Berhad. So I'm very lucky that I started Sendirian Berhad early instead of late. Why? It's because during the MCO time, movement control order time, this Sendirian Berhad in fact saved me a lot. Okay, I will share with you why. Okay, so coming back to LP, Limited Liability Partnership, even though this is separate legal entity, but when you go to a bank, sometimes the bank will still take LP as very high risk, unless you have a lot of collateral they can put in. Otherwise, they will still classify them as very high risk. The reason, simple. The management accounts is not audited. So it's not audited means there's no auditor check the accounts. No one knows whether the account is correct or wrong. So the bankers will still treat it as, you know, like an individual. They will give loans, but it's on clean loan. The interest is very high, so it's not worth it. Unlike Sdn Bhd, during the MCO time, there is relief funds that you can apply 3% or even 3.5%. So that is cheap. And those loans are normally, I would say normally, provided to Sdn Bhd. So I was very lucky that I split my company. So I still retain the PLT. Now the limited liability partnership is our HRD company, registered under HRDF. HRD Corp, no longer called HRDF, HRD Corp. So this training company is now under HRD Corp, while we started our tax firm using Sdn Bhd itself. And I'm very relieved that we started early. So during the MCO time, we managed to get a loan financing. So I think that is something that I'm very happy about. And I think every one of you will have to think, what is the direction first? I always tell the client, or even a new clients come to me, or even existing client come to me, I always ask them, what is your vision? What is your mission? What do you want to achieve? What do you want to achieve? Okay, let me give you some tips. Now, some companies came, some, I would say entrepreneurs come to me and say, we are still new. I do not know whether my partners and I can work closely or not. I have a lot of problems, a lot of questions in my mind. I'm not sure whether this business can sustain. By all means, start off with sole proprietor or partnership. It's cheap and you can always dissolve or close it very easily. All right, very easily. But once you know or decided that you want to do business, you want to make it big, by all means, go Sdn Bhd. Okay, go Sdn Bhd. Now, under some circumstances, for example, if you are under, like for example, auditor, right? Audit firm, or even like a chartered accountant. If I register under an auditor, if I'm an auditor, I cannot use Sdn Bhd. It's not allowed under the law. But tax firm can. So tax firm I go under Sdn Bhd. But if I'm an auditor, I cannot. So auditor go under statutory audit. You have to file. You have to file under either sole proprietor partnership or under limited liability partnership. Lawyer, I think is also the same. Lawyer have to use their own name. So you see a lot of ABC and Co. Basically, they have to use their own name. Professionals, because of professional. In general, I would say if you are in the service line, you can consider limited liability partnership because it's cheaper to start. Your compliance cost is low. But if you want to, intention to get a loan, intention is to get financing, intention is to find someone to invest in you, then by all means go to Sdn Bhd. So I think this is very important, a direction that you have to set in place, and you have to make sure that the direction is in place. I have a company, a client that started LLP for many years, since 2017 or 2016 all the way, because during that time they are in retail. FYI, they are in retail. So they say, okay, I want limited liability partnership. Why? Cheap. I don't have to do audit. I just need to make sure my accounting is correct. That's it. So they have choose that route. Now that route resulted in higher tax audit risk because auditor, no auditor, so the tax audit come in, higher tax audit risk. Whenever there's no auditor, I think the risk will be higher. And then on top of that, during MCO time, retail was badly affected, and they feel the punch, not the pinch, they feel the punch because they cannot get any relief, cannot get any loans, cannot get any financing, and they were stuck so badly, and they have to borrow from friends in order to cover their operating expenses, in order to sustain the business. So those are very good wake-up call that was given to them, even though I have noted them many times. But that was the final wake-up call that they have decided. At the end of 2020, they switched the whole thing to Sdn Bhd. And for financing purposes, Sdn Bhd, you have to go through at least 3 years in order to get financing, 3 audited financial statement, or even some banks will look at 2 financial statement before they can release the loan to you. So those are things that you have to think about. Now, coming back to different types of incorporation, I've shared with you. Now, another type is called Berhad. All right. Now, what is the difference between Sdn Bhd and a Berhad? Sdn Bhd, the maximum shareholder that you can have is 50 shareholders, while Berhad, you can have unlimited shareholders. That's why all the listed companies are under Berhad. They publish their company on the list on KLSE, and then they sell under Bursa. They sell their shares. So when they sell their shares, everyone can hold their shares, so they can have unlimited shareholders. That is under Berhad. Now, something that is getting very trendy nowadays is looking at crowdfunding. So crowdfunding, you take money from the crowd, you take money from the public, the mechanism is the same. Most of the time, I would say in general, they won't use Sendirian Berhad for crowdfunding purposes because the maximum amount of shareholders is only 50. So most of them will go under the Berhad. Straight away, they go under Berhad, or some cases, they may look into a limited liability partnership. Okay, this is just a tip for you, but if you need more information, you can check out with us lah. So that's basically how it goes. So there are five different incorporations that I shared with you. We have sole proprietor under Form B, we have partnership under Form P, and every individual partner will have to file their own Form B later. And then we have limited liability partnership. Now the tax form that you need to submit is called Form PT, Penang Terengganu, Form PT. And then we have company, Sendirian Berhad, file under Form C, right? C for China. And lastly, we have Berhad. Now, Berhad also fall under the same Form C. So it's the same Form C. It's just that it's called Berhad lah. Okay. There are other form of incorporations, like for example, a society, or even like association or charitable organization. I won't cover it in our this BIP 2.0 lah. It's very niche, but you have such need to talk about all this, you can come to me. But that is a big general idea of which types of incorporation that you want to choose. Now, always look at the final destination. When we say final destination is what you want to achieve. I always advise my client, what is your vision? What do you want at the end of the year? No, at the end of the business. So not say end of the business, I would say, what is the business targeting? What do you foresee yourself in maybe 10 years later or 20 years later? What do you want your business to become? A listed company? If you want to become a listed company, then start off with Sendirian Berhad. Don't think. You want to go IPO? Start off with Sendirian Berhad. Then after that, set up a holding, sell your shares to a holding, or you convert Sendirian Berhad to Berhad, doesn't matter. But you need to set the direction right. If you want to go listed, you go and start a sole proprietor. Don't waste time lah. So go straight to Sendirian Berhad. So I always ask them, what is your target? What is your destination? Where you want to be? Then from there, we decide what we want to do with our business. Then we decide how we move around our incorporation, and we decide how to move our funds. How do I raise our funds? Something like that. I also can share with you a bit on corporate finance. I think I have a separate chapter talking about corporate finance, which already published. Now, corporate finance talk about where the funds come from. Now, every business needs funds. Okay, every business needs funds. You can organically grow. Means you sell your product, then you gain profits, then slowly build up your business based on organical growth. No problem. That is one way. In fact, all the older business is on that matter. On that manner. But some businesses, for example, like IT companies, they need a lot of funds. They need funds to roll. They need to find IT teams. They need to get IT people to work out the software or even the app. So such cases, they need a lot of investment. They need a lot of funds. So there are two ways. One, get the funds from the bank. The other one is get the funds from the shareholder, so-called the shareholder, right? So there are two ways. Now, for bank, get a loan from the bank, we have to calculate what is the cost of your debt. So this is what we call cost of debt. So based on cost of debt, we need to see, okay, how much percentage then the bank is looking at. Now, in some cases, like for example, IT companies or even new companies, they cannot get loans from the bank. They can only get it from the shareholder. So shareholder is cost of equity. Now, imagine you want someone to invest into your company. You cannot just tell them and say, hey, sorry, I don't know whether we will make money or not, but you wait and see. You put 1 million first, you wait and see. I got profit, I will tell you. Who want to put money in your company? So we have to give them a target, right? So, or they have to give you a target. So they say, okay, Song, I'll give you 1 million, but I want 15% return. Okay, so that is basically your cost of equity. Okay, means every year you need to work hard to give them 15% in return. That is cost of equity. Now, cost of equity and cost of debt is two different things. Now, sometimes, let's say the bank is going to give you 1 million. The shareholder also give you 1 million, but shareholder say I want 15%. Bank say I want 5%. Of course, you go to the bank, right? The bank is cheaper. But if let's say you cannot get loan, how? Then you have no choice but to go to the shareholder. Right? So that's basically how you decide which cost that you want to incur, which direction that you want to go for. Now, it's not not necessary you have to go either one. You can always go in between. What is in between means weighted average cost of capital. That means you can partially from the bank, partially from the shareholder. Okay, that is also one way. We can put the egg in different baskets, so your risk can be mitigated in such a way. So you can do both. You can find a weighted average, you can put in both ends. I think that is also one good way in order to mitigate your risk. So that's basically your cost of equity, cost of debt, and weighted average cost of capital. Okay, check out our corporate finance topic which I have given to you. It's a very interesting topic that you can assess if you are a finance person, a very important finance person of the company. These are all corporate finance that you have to decide which one is more expensive, which one is more cheaper. And if they give you 15%, will they intervene your business? Will they kacau your business? Will they kacau your decision making? So those are things that you need to decide as a corporate finance. Thank you very much.